Welcome traders, back at it again. May 25th, 2022. Okay, today we got a couple of things we're going to talk about. A couple of interesting topics. So stick around now as a video progresses. I'm releasing the lessons I have today and some insights that are necessary. Okay. So what do we have today? If you look at this is the daily chart of the dollar. We have a gap in here that dollar has traded into, right? We broke structure here. We broke the swing point. Now we're breaking structure again. So we broke structure, right? And now there's a fair value gap right in there. We've traded up into it, and I think we can still melt. This sounds interesting. That's going down to this order block. I'm still interested in that happening. So now we're here. I'm suspicious of a meltdown eventually about to play out. All right. If you look at a 1 hour chart, you kind of see we really haven't done much. Just sort of consolidating since the week started right here. Just, maybe we get one push higher again before dropping. This 15-minute chart. There's a little gap we had in here, and it says the market reacted nicely to that. Broke down, a little gap in here, dropped again. So nice little reaction, but I like this liquidity right here. Trying to put an eyeball. I don't know why it's an X, but let's see. Oh, whatever, but you get it. So I like this liquidity down here. This is the previous day's liquidity, and it'll be interesting to see what we do. But I'm still bearish on dollar. So far, all we have just done is consolidated. Nothing really much. Some choppiness in here, and then just consolidation. So dollar, we still expecting to drop all the way to, and look, there's a liquidity pool right here. First of all, I'm on the 4 hour. Well, right here, that little day. Look on the 4 hour. It's a little swing point, So this swing point, I would expect the market to trade through it eventually, and then into the daily order block I mentioned over here. And there's also a void beside it, so that's that should be the draw. See if it draws it like a magnet. Then we have the pound. On the pound, what do we have? So on the pound, I like the fact that we could go above here. Clearly it looks like it wants to do it. I don't see this as resistance. I see it as liquidity. I think the market's going to trade right through it. We already went below this low right here, and that's traded higher above this high. And it's only a matter of time for us to get above here. There's a gap in here, so it's a lot of space for this market to trade and maybe go all the way up here. But I don't want to be too. That's far out, but my mentality is that it's bullish though. However, the British pound. And if you also look on the British pound for a second, all right, let's go back to the British pound. So there's the order block right in here actually. See that? See the line? So I'm gonna talk about it. Right in here, right? On the 1 hour. And okay. You see that's what the market traded to yesterday. We had a little bounce, and it's traded to there again, and another bounce has occurred there at the same spot, still leaving this liquidity here. So I'm expecting maybe we go into this 4 hour, if you look on 4 hour, it's an order block. Maybe during London session, we go into this 4 hour order block, and then before pushing higher. But I did look at the economic calendar. I see that we have bank holidays for euro and I believe pound, so maybe the market is lackluster tomorrow. I don't know, but bias is the main thing. My bias is still bullish on this currency, and of course, same thing with euro. I think it could get in here, like I explained earlier in my old videos, last week video. I think it's still this drawing liquidity is still in this order block. So if we're going higher, we changed this fair value gap. We've seen a little reaction. Let's see if we keep pushing into this order block. These last two down close candles. Let's see. Then euro. Yeah. So I don't know. Maybe we drop in here, this order block, and go higher, or we just keep going. But it's around this level. That's the order block. That's what the order block is at. But I'm bullish on this. I don't see it turn around yet. I notice we did take away this liquidity and reject it, but it's a little shallow run, so they could make a little deeper run, then go higher. That's what I'm looking at. And if they do that, this is an optimal. Draw your fibs from here to here. See this 61%, 70%, so we can expect a reaction there. And then, what do I want to talk about next? Okay, cool. So now since we got all that out the way, I want to talk about a couple things. One, I want to talk about the indices, right? Important lesson here today, and very important. I mean, without this lesson, there's certain stuff that happen in charts that you'd be confused and realize, and you'd be wondering why did that happen. You know, unexpected moves, unexpected retracements. You know what I mean? It's like you'd be very oblivious to certain things without this lesson I'm about to give right here. So let's talk about NASDAQ first of all. I want to talk about this trade I took. All right. This particular trade, what did I see? I saw them after FOMC release, you know, boom. It took out this liquidity here and started going higher. They left a little gap in here on the 5-minute chart. So that was enough for me to hop in the trade and expect it to push higher over here. That's my expectation, and, you know, I was being overzealous, but I was expecting it to, of course, keep going higher. But time of the day will, of course, determine if that was going to be possible or not. But we had a reaction in here, right? And that reaction alone was enough to really, I could have taken some partials. But to be quite honest, I did not. You know, reason being, I wasn't paying full attention. And what do I mean by that, right? So the indices, they actually have a futures contract, a contract that is actually traded, right? That this right here is not the same price feed as that contract. I'm gonna show you what I mean. Boom. So this is actually the futures contract of NASDAQ, NQ1 with a exclamation mark. This is the continuous contract, right? So if you look, what do we see here? A big gap, right? Let's go back to NASDAQ. You don't see, all you see is a down close candle. So seeing this, I didn't pay attention. I just put on a trade to start watching the movie. And honestly speaking, seeing this right here would have given me insight to at least take some profits. Because I know, yeah, it can run its liquidity. But since there's a gap in here on the contract chart, you have to pay attention to that. And look at how it cleanly delivered to the T. I mean, just boom. 1 hour, look at that. You know what I'm saying? Touch it, boom, drops. This right here should have been me taking partials at least, if anything. But you could expect, as the market's trading to here, to see some type of reaction. It's not just gonna, you know, it wouldn't just blow through it. Or if it does, it's gonna come back and retrace and probably go higher. But point is, just a lesson here is that you want to be looking at these contracts, right? So this right here can help you facilitate. You seeing there's a gap on the chart that you're not seeing on the regular NASDAQ chart, right? On NASDAQ, we don't see that gap. That can give you an idea, okay, cool. If I saw that, if I was paying attention, I was aware of it, but it slipped my mind. I would have known to take something off here before expecting to run up here. Because it's not guaranteed we're going to get this run. Now, I think this run is eventually going to come, but I'm not too bullish on indices yet. I'm more bullish on currencies than I am indices. They got to push a little higher first before I can say that I'm bullish, but, you know, I'm just neutral right now when it comes to these indices. And if you look at the daily chart, you can see how we just really been kind of not doing much, you know? So we'll see what happens. I mean, when this gap a little bit drops, then we've just been consolidating. It looks like we created a little swing point, so maybe we push higher. I don't know, but the lesson here was these gaps that you see on the contracts that you would not see regularly when you look at the when you look at this feed. Well, same thing with the S&P. With the S&P, you can see that clearly there's not really any gap here that's noticeable. You don't see any gap. Now, when you go to the contract, however, you see this gap right in here on May 20th to May 22nd. The gap. Look at S&P. You don't see that. So if you're not looking at these their contracts, the actual contracts, you will be oblivious to them. And the ticker sign you can see is up here. Same with this in NASDAQ. This is US 30. So you need to be looking at these as well to kind of help you know what to do. Now I got a question, and someone's asked me how do I, since I'm actually an ICT student, and it's actual paid mentorship, and he just wanted to know how he could study the ICT content, because there's a lot of information, great information, and it's kind of overwhelming for both even his students and especially, even people on YouTube. And you got to ask yourself, how do you put it together? So I just want to give you an idea of how I study the market, how I look at the market, what I do, what I do in order for me to see certain trades and certain patterns. So let's get right into it, right? I'm gonna use a pound for example. So first of all, you want to put vertical lines, right, at 0 Eastern time or New York time. That's when this what you call true day, 0 to 0, right? You want to be marking up the charts Monday, Tuesday, Wednesday, Thursday. So far, we've had a Monday, Tuesday, and a Wednesday, right? So you would also add Monday, T for maybe Tuesday, and Wednesday. This is how I'll be doing it, right? I'll keep a weekly log. Every week, I would like to have my week, just to map out what's going on for the week. I'll have something like this: Monday, Tuesday, Wednesday, Thursday, Friday, and just study the market, see when it created the high and the low of the week. See where the greatest move, where the easiest and cleanest move happened from, what happened, what took place there. You know what I'm saying? Were there any divergences? And when I say divergence, I mean SMT between a correlating pair. You want to look at stuff like that, like the dollar make a higher high, and did the pound fail to make a lower low at that same level before there was a turn in the market. So that's what we want to do on the weekly outlook. Then, really, the intraday is what I want to talk about. Now, looking at the pound, this is how I mark on my chart, and I take a daily log of this. Every day I'll screenshot this. When I'm back to this, I screenshot, what I'm about to show y'all, in order for me to build the idea this actually happens every day. You get more confident with what you're trading by looking at the market this way. If you don't have a backlog, if you're just hearing people talk about certain things in the market or how they trade the market, different strategies, but you never really did your due diligence to back test and collect data and see things happen over and over again, how do you expect to get better or get good or get consistent? Because I know before I met ICT, before I was learning from him, it's like I didn't know how to study things. How do you study a trend line? How do you collect data on that? You know what I'm saying? I thought intraday was news. Intraday, sorry. My dog just did something funny, so anyways. And I thought intraday charts were all noise. That's what I was trying to say. And I had no basis on how to look at the market. And I wasn't collecting data. I didn't have nothing. What I do, I have PowerPoints. You can also, of course, print out your charts, put it in a journal or put it in a binder if you want to do that. I have some of that as well. Or you can just take. I mean, we live in a digital age, so I don't see why you wouldn't just put them on your laptop. That way, you know, you have them with you forever. If you put on, of course, the cloud space, or you put in what are these? What's this stuff called? Solid state drive, one of these portable hard drives or whatever it is. Then you just have it with you. So this is what I do. One, we trade based off of time and price. Right? The whole basis of the mentorship or ICT's theory, or how the markets are really booked, is that the market is an algorithm is the one that moves price around, not the people, all the big money, not the whales, nothing. It's an algorithm that just moves the market around, and then people that know what's up buy at certain levels and certain prices. It has nothing to do with buying pressure, selling pressure, supply and demand, none of that stuff. No trend lines. That trend line fallacy. After getting out of that life, I realized how stupid it really is, and it's too subjective. Okay. Anyways, back to the real discussion. So, London Open. When is London Open? From 2 a.m. to 5 a.m. That's what we consider London Open. After 5 a.m., between 5 a.m. to 7 a.m. is pretty much lunchtime for New York, for people in London. So I'll just draw a little box, London Open, above that area from 2 to 5, so I can see what price action happened in that area. And then coming to New York, it starts at 7, from 7 to 10. Of course, it goes beyond that, but this is the time period we focus on for the most part. Then you have London close from 10 to, I put mine from 10 to 12. And then we also have New York close, but for the most part, these are the three you want to look at. New York close would be a day like this where there was clearly news in New York session, so you can expect an extended movement or, exaggerated move to happen around, 2 p.m. like we had at 1 p.m. New York time. When you have a news event like that, then of course you want to consider the price action within that time period. But apart from that, I'm looking within these time periods. What price action am I seeing? What patterns am I seeing? Right? This is how I log it. So I look at London. What do we see here? And I'm just use the ICT YouTube model, right? Okay. Look at London, right? London started. Boom. We broke the swing point. There's a fair value gap in here. All right. So I've taken a short. I'll just know this fair value gap. This level, of course, I've probably taken a short. Boom, the market dropped. Stop loss to be above here. Mark came in here. Actually didn't even drop one higher again. And broke lower. Right? Then this is breaking up a swing point right here. And there's still a gap. So I'll also note this area. So I kind of get the same entry twice within the same area. See a fair value gap. And drop, drop, drop. Then what do we have in New York? Remember, this is the daily order block level. So this is how beautiful this. I'm actually mad I didn't trade for some reason. I just didn't even trade New York in the currencies. I really should have. I just didn't. But look at New York. What do we have here? 7 to 10. Boom. We had a break of structure right above these highs. Boom. And this is a fair value gap as well. Right within here. And to the trade, market takes off. You see what I'm saying? The London close, what do we have? Break of structure. Fair value gap. Boom. Quick scalp. Boom. Out. Then what do we have in when the news release, right? Look at the swing point right here. This swing from here to here. Then it break a high? Yes, it did. What did we trace into? A gap. So this is actually easy, very easy. I wish I traded pound. I'm actually mad I didn't because this is a very easy day. Boom. Entry right there. Market takes off about this high. Boom. So this is how I kind of look at my charts to see this every day. And I wouldn't be trying to. One thing I feel like people do, they're just going to try to start back testing, which means they bar replaying chart. So before something happens, because I did this, before something happens, I'm trying to predict what's going to happen. Instead of, first of all, looking at the charts with the candles already printed, recognizing the pattern, recognizing how the algorithm is delivering price over and over again, seeing that over and over again, before I then start trying to do that bar replay or get me a back testing system. You gotta see these things first. I mean, when we start learn how to speak English, you gotta say the alphabets first, right? Alphabets first. You didn't just start guessing. You didn't say the alphabets once, start guessing. Okay, A, B. You wouldn't get it. You have to see it over, say it over, over and over again. Even me myself, I'm still doing this. It has the picture of what you see has to be burnt into your brain. It's about pattern recognition, because it's gonna be all kinds of forms of them. You know what I'm saying? On this chart, you can see how the same pattern. This is the cleanest one that you probably see, and maybe this one. You know what I'm saying? But this pattern right here, where it breaks structure, goes into fair value gap and takes off, you gotta see that over and over again, because it's gonna be different variations of those things. So that's how I'll study, and then I'll take a screenshot of this. I'll go back in time. You can do this on a 15-minute chart, 1 hour chart. I personally do this for the weekly. I do it on a 1 hour chart, and then for the intraday price action, I really focus on a 5-minute chart. So you can focus on 3 minute, whatever you want to focus on, but go back in time, look at your charts. Look on ICT's his YouTube channel. You see he's giving out a YouTube mentorship, right? That exact pattern. Look for that every day on the intraday price action of your on your charts every day. Take a screenshot. Just like today, like I felt like I was a little out of sync with the market for the past week. Like my trades weren't hitting as they used to. So I had to go back and look at, cause I haven't done a back test recently. Well, I did some today after I went back and looked at my PowerPoints. I looked at them, I'm like, okay, good. Boom, 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 boom. I'm seeing the pattern over and over again. I'm okay. And I realized I wasn't doing the right thing with my trades. I realized some of my trades, I was taking them based off of a different logic and not based off of what I've back tested, what I've seen over and over again. So that's what I'm saying. It's necessary for you to burn the image, burn the pattern, burn the idea, burn the logic into your brain, so you can literally see it every day and trade based off of that. I think that's all I want to talk about. I don't know if there's any other thing. I think there's something that's skipping my mind. Maybe, maybe not. And also remember, another powerful thing you can do, right? Some of these trades, you want to validate them with, this is taking a further step, with dollars price action on that same day. So what does that mean? You want to see if dollars give you the same, you want to see market symmetry. Is dollar giving the same pattern, is dollar having the same pattern, just, give you the same inverse pattern? If it's doing that, like if pound is breaking higher, creating a fair value gap, is dollar breaking lower, creating a fair value gap? You kind of want to time your trades with the dollar and not just seeing something on pound or euro, without looking at a correlated market. You can't trade the market yes, you can, but when certain things happen, you'll be wondering why it happened. Or when your charts look a certain way and they don't play out, you wonder why. If you was to go look at the dollar or look at the euro versus the pound chart, you would probably be able to realize, okay, this is probably what happened. You know what I'm saying? So that's another step you can take it by comparing the chart with the dollar, so you can confirm some trades where you'd have really got in, or some trades you wouldn't have gotten because the dollar wasn't doing the same exact thing. So I encourage you, go do this in particular. This right here will give you, if you look at your charts like this every day, take a screenshot, PowerPoint, put them in a PowerPoint, do this shit over and over again. Focus on one pair. Don't be focused on so many other pairs. Focus on one pair. Take your time. You're not look, getting wealthy, if you're watching this, that's probably on your mind. I know I'm gonna be wealthy. That's not even a question, right? So, but I'm just enjoying the process. It's gonna take a little time, by God's grace, as long as I'm here long enough. I mean, it's just only a matter of time. You know, you gotta love the process of doing this, and I love it. So, if you feel the same way, go ahead, take your time, back test. Don't be in a rush. Take your time, do what you gotta do to get you to the next level. You have to. You have to literally do. You have to back test. Just, I mean, I haven't met the greatest traders, but ICT has. You know, I'm pretty sure. And he said, no great trader doesn't back test, right? Every great trader back tests. They know what's going on in the market. They know their pattern at the back of their hands. So I advise you to go do this. Honestly speaking, this right here will step up your game, and you realize how the market's really booked on the daily. And one more key, if you're still sticking around, you know, you want to pay attention to the calendar, because some of these trades are invalidated by the news. You know what I'm saying? Like, was there FOMC news? Was there PPI news? Was there CPI news? If there's those news events, you want to wait to those news events play out. Then you see if you get your pattern. Because you will see, if you don't look at your news calendar, your forest factory calendar, or your whatever news calendar, if you don't look at it, there's going to be some times you see this pattern but it just fails miserably. But that's because you didn't look at your calendar to see if it was a reasonable time to enter the trade or not. If there's news right in front of the trade, you can't take it. If there's 10 minutes before a news event, 30 minutes before a news event, an hour before a news event, you can't take the trade and then be surprised if it fails. You know what I'm saying? So you want to pay attention to all those things. So I said a lot here, a lot of game. I hope y'all have a wonderful day. Let's see if we can continue this. I don't see dollar be bearish, of course, like I said, and let's see what we get tomorrow. Hopefully it's not lackluster. I want to make some money. I'm trying to take some trades. All right. But yeah, have a wonderful day, and talk to you next time.